The Bureau of Statistics says total building approvals, that's for both houses and units, fell by a more than expected 8.8% in March, but it does follow a bit of a recovery over the past year. Economists at AMP say, though, they're running at around 195,000 annualised, which is below the 240,000 needed to meet the Housing Accord's 5-year goal of 1.2 million new homes. Others at ANZ add that expected interest rate cuts should support supply.
We expect that the RBA will cut rates 3 more times, so that would take their cash rate to 3.35%, which we think is a stimulatory interest rate. So in other words, instead of the RBA, I guess, putting the brake on the economy, the RBA will be putting the accelerator on the economy. And traditionally, we know that when the RBA cuts rates, we tend to see building approvals lift.
The ABS added that household spending also fell in March, down 0.3%, despite a February interest rate cut, ending 5 months of consecutive gains. Some business leaders continue to welcome the weekend's election result, including Macquarie's Shamara Wickramanayake. Speaking at the bank's annual conference, she said the nation was well positioned amid global uncertainty, but complacency is an issue.
We've just also had an election result on the weekend where we had a government return with a clear majority. That again should give us a sense of safety for the rest of the world, in that it means potentially more continuity, clarity, etc. But I think business and the government now need to be thinking about, to the extent we have mandate now to think about this over the medium term, how do we position our country through these big structural shifts that are happening? And that's just, not just on a national basis, but business by business.
To the Australian share market now, which was little change today ahead of an interest rate decision out of the US on Thursday. Don't forget, though, it does follow a stellar run of 7 straight sessions of gains, which means the market is up 4.3% over the past 2 weeks. However, some analysts say there are plenty of reasons for caution as US trade policy unravels.
The lack of clarity as to what the path forward looks like that makes decision-making difficult. And if you can't make decisions, then things just start to seize up. And so that's the biggest risk, I think, that really there's the tariff implications just on the first level, but really the not knowing is a really hard thing for corporates to work with. It's hard for boards to make decisions.
Property and energy rose. Westpac extended yesterday's declines. Gold is trading closer to $3,400 an ounce, while oil also recovered from its 4-year low, Brent back above $61 a barrel. In currencies, the Australian dollar is a touch lower against the greenback, buying about 64.5 US cents, and is also down across the other major global currencies. Australia's Sovereign Wealth Fund has warned of higher prices for longer as global economic uncertainty continues, but it says its investment mix is paying dividends. The Future Fund has expanded to a record value of just under $241 billion. That's a 7.9% increase 1 year, 7.5% over 10, which means it's exceeding its mandate target of 6.9%. Its CEO, Raphael Arndt, says changes in geopolitical, economic and market environments will lead to higher inflation and bond yields for an extended period. A third of its investments, or around $80 billion, are in global equities. Now, do you recognise this sound? Well, it's the ringtone of one of the world's pioneer video calling platforms, Skype. It launched 22 years ago, connecting friends, families and businesses around the world. But now it's been disconnected.
It's a phone. I'll get it.
Video calling, once the ultimate sci-fi fantasy, now a daily reality. Founded in 2003, Skype is considered one of the pioneers of video communication technology.
Just the idea of having a video call changed the game. In fact, changed the internet forever.
Skype's quality strides ahead of 80s and 90s video calling tech.
The current technology only allowing for a slow and shaky picture.
At its peak in the mid-2010s, Skype had more than 300 million monthly users. But its iconic dial tone has largely disappeared in recent years. Experts say its retirement by Microsoft this week, a sign the platform has been overrun by competitors.
Skype was iconic for video calling, but then came along the smartphone. Apple created not just the iPhone, but then FaceTime quickly after, and then app after app after app created the same technology.
Microsoft acquired Skype in 2011 for $13.7 billion. But when COVID hit, in an effort to remain competitive with Zoom, Microsoft left Skype behind and focused its attention on strengthening Teams.
It just sort of accelerated the development, I guess, and the evolution of the capability of these tools.
The rapid integration of these tools also boosting workplace participation and inclusivity.
Technology such as Skype, Teams, Zoom has enabled me as a person with low vision to be able to get and maintain employment in a corporate job when I live in a regional town.
As for what's next, experts say video conferencing tools are at a stalemate, but artificial intelligence could offer untapped possibilities. Angelica Waite, SBS World News.